Hey guys, this is Patrick and you are trading with Prime. Just wanted to do a quick market recap for you guys, kind of look at Monday or what we have on docket for Monday. Just looking at today's price action, very high volume. I would consider that a reversal candle based on where we opened the day at and where we dipped down to. And you know, finding support down here, the buyers really brought the price level back up. Extremely bullish day. If I was to guess, you know, not that I want to guess, but just looking at the chart, not knowing that you know, that it's a weekend, I would expect a gap higher going into Monday. And if that happens, we would love to take a trade over 328, possible back test at that price, as long as the rest of the indices are confirming the movement. I would definitely look at going long at that price level. However, it's a weekend. Anything can happen over the weekend. We still have not closed above this reversal candle, and that was, I believe, let's look at the date on this one. This was on 7/23. We had this reversal candle. You know, so we have a lot of patterns going on here, and we've talked about this. One of the patterns is you know, a bearish, you know, bear flag or bear wedge or bear pennant, whatever you want to call this kind of pattern, and it will remain a bearish pattern in the context of just this area alone, as long as price stays below the high, or you know, let's call it a zone up here. As long as price stays below that, it can be a bearish pattern. However, just looking at the patterns here, this is also a support area, and price ran up, pulled back a little bit, and is rallied up to here. Again, I just looking at the chart, I would expect a gap high coming into Monday. However, anything is possible. A trader can be short using the high of this candle as the stop loss. Now, holding a short position or holding a long position, if you are a swing trader, if you have purchased in the last week, I don't know if that's such a great idea. I'm not holding any swing trades over the weekend in regards to the S&P 500. Um, you know, but depending on when you bought it, it might be okay to hold that over the weekend. Either way it goes, I'm not expecting too huge of a move. You know, unless we break out with some crazy news, or if there's some sort of black swan event that would give us a negative going into negative Monday. So, you know, that's the S&P 500. You know, Q, same thing. I mean, just looking across the markets, I won't go into all of them. Q, same kind of bullish day. We did see, if I go into the intraday charts, looking at the hourly chart here, we did have this bullish flag kind of pattern. If I zoomed out here, we saw a breakout back test. Very hard to take this trade. If anybody caught that yesterday, they're sitting pretty right now, but really it's you know, was a really hard trade to take on that back test. You know, and then we saw price just kind of rally here. Um, you know, Apple, Amazon, Google, all posting solid earnings, so that's a huge contributing factor to this. So I'm gonna go to that. I'm gonna flip into something else here by request. I had somebody ask me about the bond market, so I'm going to start talking about the bond market for a little bit, and then we will wrap up this video. I'll try to keep it brief. So this is the SPX. I'm using this chart because I don't want to use the chart that has all the lines on it. So this is something I look at every single day as I go in and I look at what the rest of the markets are doing. And you know, there are questions that come onto my mind here about, and I actually have it in here already, so I'll just pull it up. Bear with me here. So this is something I look at every single day, and it's something to kind of keep in mind. And right here, I'm going to look at this is the hourly chart. I could go into like maybe a 15-minute chart. Maybe it'll come up on the screen a little bit better. So this is kind of what I look at is you know, there's something to keep in mind with the bond market, and it is this. Just know this. When traders and institutions are buying bonds, right? They're buying bonds. So I'm going to say up arrow for the bonds. It means the driving yields lower. Okay. The yields are going lower as more and more traders and investors are buying bonds. Just kind of remember that. And with that, usually securities trade with the yields. So the S&P 500, the SPX should be going, in theory, should be going down, right? So this is something to keep note of, right? So here's what I want to look at. Every single morning I get up and I, load everything in, and I just kind of look around the market, and this is what I'm looking for. And I'm going to kind of highlight the areas. So down here you saw lows, you saw the yields rise, which means traders were selling bonds, the securities rose, right? And then you saw it kind of bottom down here, it bottoms down here, it rises again, the yields rise, securities rise. And as we go across them, we just kind of start trading sideways a little bit bearish on this day, and guess what? Bearish on the end of the day. That was Tuesday, I believe. And so you kind of see this price action. You see where I'm going with yields go sideways a little bit. We kind of have a gap down. It almost looks like a bear flag kind of pattern. I'm gonna get rid of some of these. And then we gap down this day. We traded sideways. This was a little bit of a divergence as securities rose. We gapped higher coming into Friday, but guess what? Guess what today? Yields were already falling. And guess what? Securities confirmed it. And we saw a little rally here. We got a little rally right here. Pulls back a little bit, and then the S&P starts flying. The market starts flying the last hour of the day. And what did yields do? Right? Divergence. One of two things is going to happen. The yields are going to come back up and catch up with the stocks, or the stocks are going to come down and catch up with the yields, or they'll meet in the middle, right? So it's not to the exact penny, it's not every single day, but you can see how each day they kind of correlate with each other, okay? So now keep this in mind, by the way. This is something the bears would really love to hear. The S&P 500 in the market is bullish, and I've been talking about that for the last couple weeks here. As long as we stayed above that infamous trend line on the daily chart, we are in a bull market. So this is something to kind of keep in mind, though. Today is the 31st. It's Friday, option expiration. It's the last day of the month. Um, that's one of those things you just kind of look at and you wonder, like, was this a piece of news? Is it the stimulus deal? I mean, we knew about the stimulus all week. For how many weeks now have we heard about the stimulus? We knew it was coming. We know the Fed is printing money. Well, not really printing anymore. The Fed is quantitative easing is going on. They're supporting the markets, right? The central banks around the world are supporting the markets. However, we're coming into August. Historically, for the last, I don't know how many years, the first 1 through 3 weeks in August historically are down weeks. Not all the time, and maybe this year will be different. Absolutely possible. Okay, let's go into the year to day. Let's go into the yearly or the daily chart and something again I want you guys to focus on. I could go look at the news clips. We could look at the news clips and really ask ourselves, I don't know how many people were trading before COVID-19. By the way, this is kind of what I call you might hear me talk about this, is what I call the repo market bubble, because that's how it was really feeling. This was, we won't go into repo, but what that is exactly, having to do with banks and overnight liquidity. But we'll just, incredible rally, amazing thing to be a part of. So we notice here, looking at the 2019, you kind of saw, the yields top out here, and then they kind of started rolling over into 2020, and that was kind of a question for a lot of people. We knew the coronavirus was starting over in China. I don't know the exact date. It might have been beginning of January when we first started hearing about it. But the question that a lot of people had was, why are the yields falling? Why are people buying? Why are banks and institutions, smart money, buying bonds or going into the bond market? Then we saw this a little bit. I'll put the arrow down here. We saw a lot of volatility start to pick up here. A lot of volatility picked up. And then we saw the market just kind of do a little bit of a bounce here. And let's look at the date on that. The date is, I'll say the high is on 219. And by the way, I don't know if you guys remember when there was congressmen and women. I'll try to put a link of it in the description below the video. There were people in Congress who were a part of a panel who, listened to testimony or listened to, got pieces of information about COVID-19, and this is where they sold millions and millions and millions of dollars worth of shares. And I believe there was this huge investigation about it. Anyway, that's a little side piece for you guys. So just looking at this, we saw the yields fall, and then we started seeing the yields really pick up some steam to the downside, and then guess what? We saw the market pick up steam to the downside, and then I'm going to circle this little area here. This is the, think of a rubber band snapping. This is what happened with the marketplaces, gold, silver, even the oil market, the bond market, flights to safety started snapping. And what did that cause? That caused margin, forced margin, or margin calls. You know, people were having to sell their stocks even further. And then we started to see a pretty big decline there in the market, finally finding a bottom here. Again, you have the rally in the S&P 500, and then you have the decline in the yields, which means people are, well, actually, that should be a Y. I'll say people are buying bonds. There you go. Um, so the question that this raises is this a bottom? Is this a top? Because we've already talked about this, right? We know that as long as we stay above this trend line, it's a bull market. And I'm not saying it instantly becomes a bear market if we get below it, but you have better success going long, buying the dips. Okay, it can take quite some time for this to bottom out and start to rally. Can take quite a while, or for this to continue to sell off before the stock market actually does anything about the information from the bond market. But this raises the question: at some point, these two are going to come back together. At some point they'll come back together. I'm going to go to the 20-year. Actually, let's do 15 weekly chart. Let's go to the weekly chart. So going back here, and I've adjusted I put percentages on the side here so I can kind of show you this. I'm going to go back in time. Okay, we're getting closer. There we go. So just looking at this, let me get it out of the way a little bit. You guys can kind of see that. I can see it up on the screen a little bit. So just looking at this really quick, it's like, this is really where you really have to ask yourself. I could show you the same kind of pattern, right? So you start to see the yields pull back. You saw the same thing in the market, sort of pulling back, and then you saw this part of the year, 2007, 2008. I wasn't trading during 2007 or 8. However, you're just looking at the chart here, you can see it was a buy the dip, sell the rip kind of a market, and that went on for almost the entire year. And then finally, you saw the same infamous, the yields start to fall, and then you see a snap. It breaks, right? The market breaks. And then what do we see first? Do we see a yields finding a low before the S&P finds a low? The yields found a low and then they started to rally. And then several months or 2 months or 3 months later, I don't know what time frame that is, several months later, the S&P found a low and started to rally. So that's something we have to ask ourselves. Right now, current day, if I go back here, let me zoom in here. This is currently, okay? And you can see here, I can show it to you just in this picture alone. As yields rise, the market rises. Okay, and then the yields fall, the market falls. Okay, the market rallies, and for some reason, this whole time period really, well, back here was 2018. That had to do with the trade war. This little 2018 flash crash was a trade war slash interest rates. The Fed really had to change the way they were doing some things, and then this right here is the repo stuff, repo bubble. But really, just looking at this chart, you can see even in this point right here that the yield started to go up and the market started to go up, and then it rolled over, and then the market rolls over. So that's something that we really have to ask ourselves at this point. I just wanted to show you guys intraday, what do I do on a daily basis? Just looking at these charts on a day, like if I come in the morning and look at this chart, what I want to know is what are the, this is just one clue. There's a lot of clues that we could look at. This is just one clue though. One clue is what is, you know, is this a bottom over here? Did the yields just find a bottom and then come Monday morning the yields are going to gap up and then, trade up? Or is this a top over here, which doesn't look like a top to me, but in theory, let's just say conceptual, let's just say that that's a top, even though it doesn't look like one. Is this a top over here and the S&P is going to do what it did all week? It's going to gap down and then come meet the yield somewhere. So I hope that answers the questions. Again, I could go to the watch list over here. If I pull up the Dow Jones transports, this is the little rally we saw at the end of the day. And by the way, I don't always have this. I don't use this comparison on the charts. I just watch the charts themselves. But here's the FVX 5-year. Here's the TNX 10-year. Here's the TYX 30-year. They all trade a little bit separately from each other. We can even go to TLT, which is the inverse, right? TLT is the inverse to the 20-year. By the way, since we're on TLT, let's look at it's coming into resistance up here at I don't have a price. It's got resistance up here at 172.15. So again, could this be a topping pattern right here and it's going to roll over? It's possible. The interesting thing is TLT is in an uptrend. TLT keeps climbing above all the moving averages. Found a little bit of resistance today, but even today it didn't actually sell off like we would think it to, or like we would think it would. Okay, so I hope that answered some questions. If you have any more questions or comments, put them in the comment section underneath the video. If you've gained value out of this, go ahead and hit the like button. And be sure and tune in this Sunday, 5 p.m. Pacific Standard Time. This week, instead of going over ticker symbols and stuff, we're going to be discussing options and option contracts and doing a little bit of crash course in options trading. So feel free to tune in. Would love to have participation. And we will see you guys soon. Thank you.